Hello, everyone. I'm just waiting. Basically, my co-host came to join. Here we are. Kim is here. Hi, Kim.
Hi, how's it going?
Good, good. Everyone is doing well. I believe, yeah, it's almost 5.
Yeah,
Let's give maybe more 30 more seconds, a little bit more over here.
exactly. Sounds good. Sounds good. Everyone's probably shopping.
Black Friday,
Black
absolutely.
Friday. Yeah, yeah, exactly.
Yeah,
Hey, but it's good though. Black Friday, we've got mortgage changes. It's almost like Black Friday, but for mortgages.
absolutely. I'm pretty much sure there would be a day when the lenders will say this is a Black Friday sale.
I've been
You
hoping, I've
never
been
know.
waiting. I've been
But
waiting for that.
one day only
Yeah,
Black Friday sale for
exactly.
mortgage rates.
Exactly. We'll have that and then we'll have a 1.99% interest rate again.
That's that would be something. Definitely that would be something.
Yeah, exactly.
Wonderful. Wonderful. Yeah. So, Kim, I know it's the same thing. I'm pretty much sure on your end. I'm getting a lot of questions these days with upcoming changes with Government of Canada that announced earlier, right? December 15th changes regarding the 30-year amortization and increase in the insured basically amount from 1 million to 1.5, right? So I'm pretty much sure you also hearing a lot about
Yeah.
those.
Tons. I think the big thing that most Canadians, especially if you're buying your very first home, right? There's a huge, huge change coming December 15th, like mark it in your calendars. This is going to be a big date because two new proposed changes that should be really helpful for all Canadians, right? I know sometimes before, like with the new government programs that are introduced, sometimes it's more geared towards like certain provinces than others, but
Mhm.
I would have to say that both of these changes coming up are actually going to be beneficial for all of Canada, pretty much.
Yeah, yeah, makes sense. There are plenty of other changes coming in, and
Yeah.
we will discuss those changes in our future episodes, especially the one that is coming on January 15th, coming in, where you can refinance your existing properties up to 90% loan to value. And then there's another one change coming in regarding the stress test. Lots of people are posting about on social media that there will be no stress test. Keep in mind, this is only for the renewal mortgages only. On a purchase or a first time mortgage, definitely stress test is still here. So
Yeah, yeah, exactly. So, but again, still, I do believe that it's a step in the right direction,
mhm.
though. This will help out many Canadians, especially since with the high interest rate economy that we're in right now. Obviously, the good thing is that rates are going down, right? Which is really, really nice. But again, it will, little changes like this will definitely help us out in the long run.
Yeah, yeah. So I know we are waiting basically right now for many lenders to provide some information, but we will share what we have available today. Government introduces many things, and what I'm trying to say is lenders will take their time to amend their policies behind the scene. They will amend their systems. I mean to say computer technology and everything, and then they have to come up with the new paperwork also, the new legal documentation. So it takes time on each lender's side, depending how busy they are with other projects at their own that were going on. So yes, government introduced few things, but definitely those things will trickle down on some lenders. Some main lenders may implement those changes right away. Some lenders will take their time, right? So, what are you hearing, Kim, about the changes are in the Calgary market?
Yeah, I think it's been, I don't know for you, but like the Calgary market has been pretty stable. I know
Mhm.
it's been quite busy, and I think that with these new changes, and as again with rates coming down as well, I do expect things to continue to be busy. Like I don't see it slowing down anytime soon, which is good.
Yeah, and to our listeners and basically viewers across this Instagram channel, we would request if you have any questions regarding mortgages today, please feel free to type in your questions in the comments, and we will try to answer those questions side by side. And any question regarding mortgages, we will try to answer them. So, yeah, Kim, many. Sorry, go ahead,
Yeah, I was
Kim.
just gonna say, well, you know what? Like, let's maybe break down like all the new changes that are coming, right, for our listeners right now. So I guess like the first things first, I think one of the big changes, if you're a first-time home buyer, is that now, as of December 15th, so you gotta keep in mind that you have to take possession after this 15th, okay?
Mhm.
You are allowed to take a 30-year amortization. So previously, when you are buying a home with less than 20%, so again, it has to be an insured mortgage. Previously, if you're buying a home with less than 20% down, the maximum amortization you could obtain was 25 years. Then the government came in. What was this pre? Like in summertime, where they said, well, if you buy a new build, then we'll give you a 30-year amortization, which was nice. But now that rule applies to anyone who is buying a home, right? As long as it's your first home, as long as you're doing a down payment that is less than 20% down, you can do a 30-year amortization. Previously, you had to do 20% down, but that's no longer the case. Of course, it's still an insured mortgage, which means insured premiums do apply. But Preet and I want to walk you guys through a little bit about the math, right? How this could be such a game changer. Even though it doesn't sound like much, but having a 30-year amortization will definitely help your purchase power quite a bit.
It will definitely. So it like 30-year amortization is always basically a tool that I would like to have in my toolkit.
Mm-hmm.
It's not necessarily that we will recommend that you should take a 30-year amortization.
Yeah.
Whether basically you are doing a existingly right now you're doing a refinance, or after December 15th, let's say you're going with this brand new first time home buyer property or brand new property. But this tool definitely gives you 30-year amortization, gives you some buffer, which could be beneficial. Maybe not today. Maybe it could be beneficial 6 months, 1 year, 2 years from now. And the prime example is COVID time, March 2020. When COVID hit, many people lost their job and they had to go back to the bare minimum payments. And those bare minimum payments were only possible because they had the amortization on their contract as a backup, right? So they were making payments and they were ahead of the schedule. They were like probably sitting at 16, 17 years to finish that mortgage. But as soon as they lost their job during COVID, they extended their mortgage payments, went back to the lender. Lenders also gave some like payment plans. They were deferred the payments, right? And they also basically used the basically lowering their payments with the remaining amortization. So they could go back to the 30-year in that scenario, right? So that tool, I always say, is best to have it on paper with the lender. You can use it whenever there's an emergency or life-changing event.
Mm-hmm.
You need to basically go back, right? So, but coming back to the calculations today, I will break down those calculations briefly. So let's say somebody has $100,000 income today, and they are trying to buy a property today, first time home buyer, no other debts. And let's say for the calculations, we are using the 5-year fixed interest rate because that's the easiest way to qualify for a mortgage.
Mm-hmm.
With 25 years amortization, no debt, and by using $100,000 income, they will qualify somewhere close to 425, 423 as a purchase price for a mortgage,
Mm-hmm.
right? So for that property. But since this change would be coming in December 15th, we keep the other parameters same and only change basically the amortization from 25 years to 30 years. Their buying power will go up from 423, 425 range to 450 range. So there's definitely increase in some $25,000, let's say,
Yeah.
in this scenario, where they can buy a little bit more on their
Mhm.
purchase side.
And I want to add as well too that by having this extra flexibility, it will really, really help you, especially in a competitive market. So again, like
Mhm,
Preet and I, we're both in the Alberta market. And what happens is that when interest rates are going down, which they are currently going down right now, you got to know that the competition is going to go
mhm.
up. right? By having this little bit of extra buffer, especially if you're a first time home buyer, just being able to bump up your purchasing power by a little bit, that could give you a little bit of a winning edge, right? It could give you maybe that little extra bit of power to actually win over a deal. Because again, remember, when rates go down, competition goes up, right? There's more people entering into the market.
Mhm.
And if you can qualify even just for a little bit more, it could make a whole difference of winning a deal, or it could also make the difference of, instead of maybe you only qualifying for a condo, right? In some certain income situations, it could actually be able to jump you to the next level, which maybe could be a townhome to a single family home, so on and so forth, right? So again, a great, great positive change, but you don't have to take the 30
True.
years, right? It's just a nice option that's there. Just know
Mhm.
that with any insured mortgage, even if you're doing a 30-year amortization, just remember and be mindful that it is insured mortgage, which means there is a premium. Their premium for a 30-year mortgage would be a little bit higher than a 25 years.
Yeah.
So something to kind of be mindful of.
Yeah, it's not that huge, but definitely it is there, right? So, and it's pretty much the same thing. Like if you go back in history and look at 2006, 2008, these kind of years, mortgages, this premium was there. It's nothing new, but when governments basically stopped doing this 30-year amortization, obviously nobody talked about it. But now when it's coming back, reintroduced, if the client basically chose to go with a 30-year amortization, the CMHC premium, which we generically use this term, normally it's called as insurer premium, that will be basically higher than a 25-year amortization. And
Mhm.
Kim, would you like to explain our listeners and viewers regarding the other change that is coming on December 15th
Yeah, so
regarding the
the purchase price.
1.5 million?
Yes.
Yeah?
Yeah, for
Mhm.
sure. So the other change that's coming down the pipeline is previously before, and again, like this is not for just only first time home buyers, okay? This is for
Mhm.
repeat buyers as well too.
Yeah.
If you're buying a home to live in, just know that you're always allowed to do a down payment that is less than 20%, right? But however, in the past, the cap would be a maximum purchase price of 1
Yeah.
million. Now, what the government has done is they have increased it now to 1.5 million. So if you have a purchase price that is up to 1.5 million, you are allowed to have it as an insured mortgage, meaning you don't have to do the standard 20% down payment and you can do less than that. Now, when I say less than that, usually the minimum down payment is 5%, but just know that the rule essentially is if you're planning on doing 5% down payment, just know that's only applicable on the first 500,000. Anything in addition to that, you have to pay 10%, okay? So not to confuse everyone and think that you can buy a $1.5 million home with 5% down. No, there is a tiered calculation for down payment, but the win that we want to discuss here is that it's the fact that you don't have to do the full 20%, right? Like you can do a lower down payment, which again should help home ownership as well too. Especially like I don't think it really makes too much sense in our market in Alberta, but
Yeah.
really this is a big win for the Ontario market, the BC market, where again the price point is a little bit higher over there.
Yeah, but the way our Edmonton and especially Calgary properties are going up, I don't think this would be a bad thing for us in future. Maybe 2 years down the lane, maybe who knows? These kind of properties over 1 million would be a very normal thing for us. The way the property prices are going up gradually, not drastically, they're going up, but gradually. I have seen year over year the property prices are going up. So definitely. And keep in mind this 1 million and 1.5 million CMHC or insured that is privilege that is coming up is only for the home buyers, like it when it is basically your principal residence. This is
Yes.
not for rental property. So this is when you are declaring to the lender and at the lawyer's office that you are basically going in to live in that property. This is basically for them. So yeah, so these changes definitely will make some impact. They will bring in some momentum into the market. So if you are still right on the kind of edge and thinking, should you buy and should you not? I would say definitely December market, January market is little slower than a June or July market, less there would be less people in the market. So there would be more chances for you to look at those properties and less offers, competitive offers. So it's not late to basically jump into the market and get your pre-approval call. You can call Kim or myself and we can look at your numbers, get you pre-approved. Once those numbers are pre-approved, then almost 70% of the job is done. We know we have already crossed that hurdle with the pre-approval and we are aware how much you can get into, then it will be so smooth sail for you going forward with these changes. Definitely, these changes are only applicable on December 15th, but we can help you in between today and December 15th. We can help you prepare the documents and get you ready for that.
Hmm.
Yeah.
And I think it's a really good, like the one thing I want to mention as well is, especially with that insured product where we can go up to the 1.5 price point. The one
Hmm.
thing that I've seen that you can kind of get creative with too is if you're buying a property like a duplex or something where you're planning to live on one side and perhaps rent the other side, this is a great win too because now like you kind of have a little bit of a hybrid
Yeah.
program where you can buy a home to live in and also an investment all in one shot, right?
Yeah.
So definitely a great program here. It's nice that the threshold is higher because it does open up the doors for those potential investment opportunities as well.
Absolutely. Absolutely. Yeah. I would again request our listeners and viewers if you have any questions, kindly type in and we would be happy to help. So, Kim, what do you see right now regarding the interest rates? What are you hearing in your circle of mortgage lenders?
Mhm.
Where are the interest rates going? I know that's the hottest topic. Everybody wants to know that answer.
Ways, yeah. I think right now, like obviously the big topic at hand is everyone's just all eyes on Bank of Canada. Bank of Canada is going to be meeting as of December 11th, and from all the market noise, everything that we've been looking at, all signs point to a decrease, right? But
Mhm.
again, with the decrease, it's always almost a flip-flop between are they going to drop 25 basis points or are they going to drop 50 basis points? For me, like my hunch is I think given where the market is right now, I think it's gonna be another supersized cut. Like I think it might be a 50 point.
Okay.
Yeah, like I think it is just kind of, given the data that we have right now, I know there's a lot of uncertainty, especially with our friends in the States here. But I mean, if we're looking at unemployment numbers, that's going up. GDP growth is a little bit slower. Inflation is, like I said, it's still at the target where they're looking at, right? Like the 2% zone. So I mean, there is going to be a decrease. It's just a matter of like when or how much per se.
Yeah, the 0.25 or 25 basis points is given. It's 100%
Yeah.
it's there December 11th. But I would be happy to see if there is 50
Yeah.
basis points. That would
Selfishly,
be
me too.
pardon me?
Yeah. I said selfishly, me too. I'm a
Yeah,
big variable fan. So again, I think it's a great
hands
product,
down.
right?
Yeah,
Especially for like the flexibility. But when it comes to the rates, I do believe that the variable rate right now is kind of, the path that you may want to look at. I know when it comes to fixed rates, I feel like bond yields have kind of stabilized. They've been kind of on a wild roller
wonky.
coaster for the past,
Yeah,
yeah. And I think it's just because of all the economic data that's coming out from the States, like that really, really impacts our bond markets. But right now, though, I think if you're looking at interest rates, I think that the best bet is going to be the
very
variable, doing
low.
something such as like a hedge strategy where, you're taking a 5-year variable term and then maybe keeping an eye on the market and then converting it potentially at 2 years into a fixed rate. That hedge strategy is probably going to be a proven winner in the upcoming year for sure.
Absolutely. And the lenders, like I would like to share this with our listeners and viewers. The lenders are not giving much discounts on variable at the moment. I am basically trying to find out why, and the only reason that the why answer is they we have to push back the lenders to give discounts on the variable today a lot, like too much back and forth with escalation rate escalations. My thinking is they know that the variable rates will be declining in future in 2025 a lot, and they don't want to lose their margin basically by giving hefty discounts, let's say 1% off prime or 1.1 or 1.2, which was normal right after when COVID basically was, we were out of COVID, which was a kind of normal thing. But now it's 0.75, point 0.8
Mhm.
is on a conventional deal, on a 20% deal, down payment deal. Yes, on insured deals, there are discounts still available, but the lenders are kind of holding on to those discounts. Kim, do you feel the same
I
thing?
do.
Yeah,
I do. And who knows, right? The sentiment could change later on as well, too. Perhaps it's
mhm,
because this is also naturally like a slower market for the banks as well. So, for our listeners out there, just know that the bank fiscal year end is usually October
31st.
31st, right? November 1st marks a brand new year for them. So,
Mhm.
are the banks really hungry for business at that point? I feel like it's almost cyclical. Every time November hits, they're well fed from last year. It's just a new start, but usually we see the more competitive pricing come out in spring because that's when everyone's shopping. So, and everyone wants a piece of that pie. But
Yeah.
yeah, it'll be a very interesting spring market indeed.
Absolutely, absolutely. And with the changes that are coming in, especially the January 15 changes, we Kim and I would basically investigate more and write down some more notes, and we will come probably in the first week of January, come back with another live session with that program that is going to be launched in the January 15th.
Mhm.
That program is basically targeting towards the rental market. Like you can build up a rental suite, and it will be easier for the existing homeowners to finance more and get money out to build that property. There are limits on that. The numbers are there. So I think with that program also, the market will definitely be basically on the uptick. So if somebody is already in the property and they are looking to refinance, they definitely will be basically asking for more money from the lenders, and the lenders know that, right? So these things will happen in future, which means the mortgage market would be, or the real estate market would be busier market in 2025. Yeah.
Yeah, no, I definitely agree with that.
Hmm.
So I guess again, too, I think we have a few minutes left. So for anyone listening, if you have any questions, I don't think we have anything though. Let me just
No,
see.
I think our listeners and viewers are quiet
Yeah.
today. They maybe are enjoying the Black Friday
Shopping.
sales, shopping. Yes.
Yeah.
So that's okay. I did my shopping this early in the morning, so
Yeah. There
I'm
you
okay with
go.
that. So, yeah. So, again, our listeners and viewers, thank you very much for joining in today in our Mortgage Insiders Edition live edition on Instagram. And we always love your support. But if you have any further questions, you can reach any one of us, and we will be happy to help you out with mortgages across Alberta or across Canada. Where a Wine Group team is a national team, and we can help you out with any questions, including commercial mortgages, private financing, anything you can think about financing. The answer is here. Kim, anything you'd like to add before we end this session right now?
No, nothing at all. Like I said, lots of changes coming, but again, a lot of positive changes for the market for
Mhm.
sure.
Absolutely. Okay. Thank you, guys. Thanks for joining in. And we would see you next time on our live session.
Thank
Thank
you.
you. Bye bye.